Projects reported a good set of Q3 numbers. Revenues were up 17%. The company's profit after tax, though, was impacted by higher effective tax rate and higher finance cost. Amit Uplenchwar, director at Kalpataru Projects, is now with us on the show. Amit, morning, and thank you for joining in. The first question is on your revenue guidance. When we last spoke, you had guided for a 20% kind of a top-line growth. First 9 months, the revenue growth is 9%. So what happens to your full-year revenue growth? What is it we're now looking at?
Good morning, Rima and Vivek. To start with, we had guided for 20% at the beginning of the year, but let's face it, Q1, Q2 were slow across the board, especially for infra companies because there was a protracted long election in several phases. And because of that, there has been a capital allocation to some of the sectors which are heavily government dependent, like water, etc., didn't grow the way we had anticipated at the beginning of the year. We had, as against the 66,000 crore deployment over a year and a half ago, just 20,000 crore up till today in the water business. So barring water, if you see, all our segments have given 20 to 40 to even 99% growth in revenue until 9 months. But because of this water, we've had kind of a setback because we couldn't grow the business. There was no allocation at all from the government, or very little. Hence, we are at 9% today. But if you see the projected water shortfall, we would have been at 18-19%. If you look at the end of the year, where we are, we've had a great Q3. We've had phenomenal growth on revenue, EBITDA, PBT, all around. And I think Q4 should continue in that fashion. So I think 12 to 13% is where we should end at for the full year in terms of revenue.
Okay, so from starting off with expectations of close to 20% growth, you're looking to end the year in the range between 12 to 14%, and we believe a lot of that execution will be back-ended in H2. Q3 has seen significant improvement in revenue. Q4 also you expect that momentum to sustain. Now, coming to the margins, what is the margin trajectory you're seeing? Q4 and FY25, where will you end EBITDA margins at, and thereby where will you end PAT margins at?
So, luckily, so far as our PBT is concerned, we've always said that we will try and be around 4.5 to 5% for full year FY25. And I think we will maintain that guidance and get to 4.5-5% towards the end of the year. I think in Q4, we should be inching almost close to 5% as, the execution picks up, better margin execution. So I think there is no shortfall in guidance. I think we will achieve our full 4.5 to 5% in between the PBT for the full year.
And at EBITDA margins also between 8-8.5%, that holds?
So that also holds. The objective is to try and make that better, maybe by 30 or 40 basis points in Q4. But I think our EBITDA will hold, so will our PBT, except revenue, which was totally beyond our control for lack of funds from center to various utilities of states where we have orders. But that also should pick up, hopefully, going forward, now that there is again a very large allocation in the budget of close to 65,000 crores for water. I think starting Q1 of next year, this should come back again. Because as you know, we already have a 10,000 crore rupees order book in water. So I don't see a runway in terms of growth being a challenge because the orders are already there in hand.
Amit, not only have you, but even peer companies have indicated that there have been significant shortages in collections as far as this particular segment is concerned, Jal Jeevan. So going forward, a couple of peer companies have actually mentioned that they will take a halt in going ahead and participating in these tenders. Will you continue to participate? Has there been any improvement in collections? And secondly, what is the order prospect pipeline as far as the domestic space is concerned, especially FY26? We want to get some visibility as far as the order inflow is concerned.
So, Vivek, right now we are sitting at a very, very comfortable order book of in excess of 60,000 crores. We had guided at 22 to 23,000 crore full year guidance for order intake for FY25. And we already are at 20,000 crores YTD and L1s of another 2,500 odd crores. And I think we will again meet our full year order booking guidance as well. Going forward, I think, the segments of transmission and substations, our BNF segment, urban infra, oil and gas, all are looking very, very robust. Even in case of water, I don't see a slowdown in projects. We anyway have a very comfortable order book of 3 years currently sitting with us. And going forward, looking at the allocation in Jal Jeevan Mission, as you mentioned, there seems to be a very large allocation in the budget. So there's no reason why those should not convert into orders going forward as well for next year.
So water was, of course, the big problem area for you, but a very relatively a smaller one, railways. That's, I think, just about 4-5% of your top line. That also saw a revenue decline in Q3. What was the reason for that? And is that going to be a pain point for you going ahead?
So, Rima, we've always said that we want to be cautious on our railway guidance. There has been extreme competitive intensity in the railway business over the last 2-3 years. And we are cautious, we'll bid selectively. So far as this Q3, there has been a little bit of a miss on railway, and that's primarily due to our project in Bangladesh. And as you know, the situation in Bangladesh was beyond anybody's control the last 2 quarters. But again, the projects have picked up, things have seemed to regain normalcy there, and that should come back again on stream.
Amit, one last question. There's been a lot of worries in terms of bidding, actually being quite muted when it comes to Saudi. So export part of the business, has there been any slowdown in bidding? What is the prospect pipeline for FY26?
So, like I said, Vivek, we are already at one of the highest ever order books that we've been sitting at Kalpataru. Our order intake has been exactly where we thought it will be at the beginning of the year. I don't see any of that slowing down either in our domestic book or international book, considering that BNF, transmission, oil and gas, urban infra, all are showing extreme promise in terms of the next, not just year, but the next 3-4 years. And I think being a large player in that segment, we continue to be, very optimistic as to get a fair share of that opportunity that lies ahead of us.
Thank you so much, Amit, for joining us, giving us a sense of how Q3 panned out. Some moderation in terms of the guidance as far as FY25 is concerned, but the order book quite strong at the end of Q3. Time now for a short break. We'll be joined by Ankit Thakkar, CEO of Jupiter Lifeline Hospitals, to discuss the company's third quarterly performance.